And now we are live. Matt, are you excited?
I am excited. There's a lot going on right now, so we'll try to talk about a whole range of topics.
Yeah, let's start with the S&P 500, right? S&P 500, like if you are in North America or if you're anywhere in the world, really, you are paying attention to the S&P 500, okay? Why? Why are you paying attention to the S&P 500? It's comprised of the largest corporations essentially in the world, in the United States. Okay. So if the S&P 500 is going down, right? So if the S&P, this is a chart of the S&P, I zoomed out, right? So you can see us going all the way back to 2008. But if you hear on the news, S&P 500 going down, most likely your clients' portfolios are also going down. That's how it works. All right, there's very few places that you can have your clients invested in the seg fund world where if the S&P 500 doesn't go down, their portfolios don't go down. Okay, so just something to keep in mind. You can see that the United States has been on a ferocious bull market since the great financial crisis, right? So that's over here. Okay. I always like to zoom out and get perspective, right? Because I can see since 2008, 2009, the S&P 500 has gone up by about 500%. Okay. So if you had put $1 in 2008, now you have approximately $5. Okay. So now when you're looking at the present moment, it's like, okay, well, if that's where we've come from, right? Where are we headed in the future? And what could that possibly look like? How could that play out? Okay.
I'm a big S&P guy.
Sorry?
I said I'm a big S&P guy.
Why are you a big S&P guy?
Because I haven't been following much, so I've kind of resorted to just S&Ps right now. So I haven't been like so in depth as like I once was and trying so hard that it was driving me mental. So I just kind of shifted to S&P, but it's been going all right.
Yeah.
I dipped a little bit recently though.
Yeah. And what people are wondering now is, okay, we've traveled so far, right? Is this going to be something where we just continue climbing and that's it? That's all? You need to stay invested. You want to start taking large sums of capital and put in the stock market? Or are we going to have a further correction, right? And then maybe continue the climb up, right? So that's two possibilities. Okay. First possibility, we continue higher. Second possibility is we correct lower, then we go higher. And what's the third possibility?
Crashes.
Yeah, exactly. You're smart. Third possibility is we have a full out crash, like a full out crash. What would a full out crash look like? A full out crash would look like, I'm going to draw it here, the new drawing. A full out crash would look like a move to this purple line, a small little bounce, and then a move below the purple line. And like that would be like you're in crash territory. Like if you have clients near retirement, like they're thinking about turning their RSPs and turning them into a RIF. Okay. You know, they got a year or 2 years to go. If that were to happen, then, now you're gonna have a conversation with your client as to what you got to do. Right? Are you going to like defer your retirement? Are you going to cash out now that the market's crashed? Right? Are you going to buy more? What are you going to do? Okay. So I always like looking at the S&P from just a bigger perspective and just kind of being flat and being clear on like the possible ways that this could play out. Right? And then keeping myself informed to have a better idea of understanding whether option 1 is going to play out, option 2, or option 3. Okay. So that's kind of what we're looking at here in the S&P. We've been on a large run. It's kind of at this inflection point where like it could definitely continue going on higher, but it's also vulnerable to moves down. Okay. And if you can communicate that to a client, then you can make the case for dollar cost averaging on S&P 500 or some type of fund, right? Because you explain to your client the possible scenarios. And the best way to take advantage of those possible scenarios is to just periodically buy into the market. Okay. To go all in, to get a lump sum of 100,000 and to just put it all into the market right here. Right. So a client gives you 100K, instead of dollar cost averaging, you put it all in into a fund. What is the client going to say if this happened?
What the hell is wrong with you?
Yeah, what the hell's wrong with you? What else could the client say?
Why would you put it all there?
Yeah.
I feel like he would just basically question.
Yeah, you start asking questions. Right? So it's always good to have that preface conversation of getting flat on how this could play out. And for those reasons, in this scenario, it may make sense to dollar cost average. Now, if the market did crash, let's say back to this red line, then maybe you could say, hey, I know you're thinking about dollar cost averaging with this $25,000, $50,000, but did you know that the market has crashed 30%, right, since its all-time highs? So now may be a better time to take a bigger position and maybe defer the dollar cost average, right? And then, now you can start having more involved conversations with your investment clients, right? You're not necessarily you're not calling the market or saying, hey, I know this is going to happen, or I think this is going to happen, but you're looking at the possible scenarios of what could happen. And I think that's important. Okay. So that's S&P 500, super important to pay attention to. Another metric that's important to pay attention to, or another area of the market that's important to pay attention to, is 10-year government bonds. Okay. So do you guys know what bonds are? Like, just quick, high level. What are they used for? Like, what's a bond for? What do we use bonds for?
Isn't it like a company's debt?
Yeah, company, or who else would issue bonds? Companies?
Government.
Trees.
Right.
What was that?
That's right. Governments and corporations issue debt. Okay. So this is the cost. So this number here on the right side, this is what a bond is yielding. This is what a bond is going to pay you if you're invested in a 10-year bond. It's going to pay you 2.87%. Okay. As the price of bonds go down, their yields go up. Price of bonds go down, yields go up. Okay. What's the impact on the economy if yields go up?
I can see people say, hey, I could get a less risky rate of return. Why would I invest into securities? A lot of people think that.
Okay. Yeah.
First thing that comes to my mind.
So you have a higher guarantee of a yield. Maybe you'll take less risk elsewhere.
Yep. And
right.
Yeah, also coincides with taking less of a loan. The days of being able to take a super low interest rate loan and then parking that money into a higher risk fund invested in equities and being very comfortable with that might be starting to dissipate.
Exactly.
Yeah.
Exactly. Demand starts to go down for things like mortgages and private loans. right? So if you have the price of yields climbing the way it did, right? So here's pandemic, right? At the bottom here. One T-bill paid you 50 basis points, 0.5% in 2020. Okay, now one T-bill almost paid you 3% today. Okay. So what I want to look at, what I want to understand is what would happen if the price of yield or if the yields continue to go higher? What would that do to the economy? What if yields went from 3% to 6%?
The economy will slow down because people, they don't want to invest. They don't want to.
Yeah, exactly. They don't want to take risk. Borrowing now to invest takes more money, or the debts that I already have now cost me more, so I have less to invest.
That's right.
Is that correct?
First thing I would
Yes.
do, any of my
Yes, Matt?
clients that are in retirement, approaching retirement, more of their money would go into these safer assets than in equities. Everyone's going to follow, and those equities are not going to have an easy time rising anymore.
Yes, exactly. Exactly. So what I'm watching for and what you should be watching for is, are we going to get out of this 40-year, I'm going to delete everything. Are we going to get out of this 40-year bear market in yields? This goes back to 1981. Do we go into an economic era where instead of yields going down, they go up?
The yield is going up now, no? Right now.
Nora, the yield
Yes.
has been going up from here. See where I just drew the circle?
Yes.
Yields have been going up from record lows, right, to record lower highs. Okay. So yeah, the
Okay.
yields are going up, but they're just going up counter to the trend.
Mhm.
Okay. This is the trend. This is the trend. A move up
Okay.
would be counter to the trend. Does that make sense?
Yes.
Okay. Now, the reason why this is important is because a world for us of interest rates rising looks much different than a world where interest rates are going down.
Mhm. And a lot of people that have been investing, the whole time they've been investing, they've been in a low interest rate environment and rates have been trending downwards.
Exactly.
Yeah.
So if yields do this on the 10-year for some reason, I don't think it's going to happen, but if it did, what's to say the S&P 500 can't go down for 40 years? Right?
Yeah, we haven't really seen it, so we can't even relate to that, but it's a possibility.
Exactly. Now what I do is I want to zoom into the present moment now, and I want to look closely and ask myself, okay, is it likely, same thing as the S&P 500, you ask yourself the same questions. Does this go higher and continue? Does it top out and correct lower? Now we're saying correct lower. Or does it top out and crash? Same thing. You can ask yourself the same questions. Right? Very possible that we top out here, we come down, and then we continue higher. Or very possible that we top out here and we crash. Or possible that we just break out and continue heading higher. And as long as you understand what each scenario would mean in the grand scheme of things, now you can advise your clients accordingly. And you can have a deeper conversation about their investment plan, about whatever their investment plan is or the investment plan you had for them. You can step in and you can have them think about these things. Okay? Because a world of higher interest rates most likely isn't going to be good for stocks or crypto or anything risky or housing. Okay? But a world where the yields top out and the government continues to print money is very good for those things, and yields come down. Okay. Any ideas there? Any thoughts? Any feedback? Things that come to mind? We're talking about the US 10-year, how higher interest rates impact the economy, how lower interest rates impact the economy, and how you can use that to better serve your clients.
One thing I'll ask, Serge, I can see with the stock market, there's a lot of things that can affect it. We have somewhat of a free market. We have a mixed economy, but with these government bonds, like, people get to decide what happens. And we have a little bit of an idea what's going to happen, but we don't really know, but it's more of a controlled aspect. So I don't know, there seems to be this idea of we need to raise the rates. I can't see it going straight down to where it was a couple months ago right away, but we have no idea.
Exactly.
Mm-hmm.
Well, what I'm trying to figure out is if we did go higher on rates, like, how could our economy survive that? Right? So, like, because of that, I would think that government officials, central banks, would come in and do what they need to do to contain the yield from going too high. Right? How would they contain the yield from going too high? What would they do? What would governments have to do to ensure that yields do not rise anymore? Think about that. To ensure that the yield stays leveled, stays capped, what do governments have to do? They have to print money and they have to buy the bonds. That makes sense?
Yeah, I was gonna say something shady, which kind of goes in there. Print money.
They need to issue the money.
Yeah.
They need to make the money out of nowhere and buy the bonds to create artificial demand. You create demand for something, what happens to the price?
Goes up.
It goes up. If the price goes up, what happens to the yields? They go down. Right? They go down. Yields go down, prices go up. Yields go up, prices go down. Let's look at the price. So this is the yield of a 10-year. Okay? Let's find the price of a 10-year. This is just the yield. So now we're going to look at the price. Okay? TLT 10-year. What's the TL? What's the T? I forget. We'll look at a 20-year. It's very similar to the 10-year, just because I can't pull up the 10-year right now. The price of a 20-year bond has gone down since yields have gone up. Does that make sense?
Mm-hmm.
So what it costs to buy the bond is much cheaper, is less than what it costs up here. Make sense?
Yeah, no one wants your old bond at a lower rate when they can buy a new one at a higher rate.
That's right.
So when interest rates are high and you buy a bond and interest rates go down, now you can either keep the bond or you can sell it for a higher price. And that's what we've kind of been seeing as the price has been rising. So now prices are dropping.
Exactly. And if I look at this chart, right, like if I start adding like fancy indicators, which, you know, we're not really, you're not supposed to do it. But if I start looking at this chart, I would think that this is probably getting to a level, we're back at 2018 prices. We're probably getting to a level where big buyers might start to come in and buy the bond market. We're getting to levels where governments may say, hey, like, okay, we're going to hike interest rates, but we know next year we'll probably have to cut them. Let's start printing. Let's get that printing machine going and let's start buying our bonds. Right. And then you can see the price of bonds go up again. And if the price of bonds go up, yields go down. If yields go down, what happens to stock markets?
When yields go down, stock markets go up.
Yeah. I can't earn as much with a guaranteed T-bill or a treasury bond. Like, I'm not gonna, like, what am I gonna get, a risk-free 1%, 5%? I might as well be in the stock market. Now, if I can get a risk-free 3% or 5%, maybe I'll defer the stock market. I'll go straight into T-bills. Okay. But listen, we're back at levels that we've been at in 2008, 2011, 2015, and 2018. So if you buy bonds now, are you buying high? Technically, no. You're buying low. You're buying back at 2008 prices. Right? Do governments want to buy cheap stuff? Do they want to make money? Yeah. So they'll print, buy the bonds, hold the bonds, price goes up, economy heats up, then they got to sell the bonds and they'll start raising rates again. Right? They'll print money to buy the bonds. The price will go up. They'll start selling the bonds. They'll make a profit. They'll raise rates. Prices will top out and then we'll come back down again. So you got to ask yourself, what's going to happen? Is government's going to let yields go crazy? Are they going to cap the yields and buy the bonds? What do you think is going to happen? Based on that, you can advise accordingly. I'm under the impression that government's going to bail out and buy the bonds. That's what I think is going to happen. I don't think they're going to let everyone just default on mortgages and credit card debt. I don't think that's the plan. It's not good politically, right? And yeah, you're just going to have a lot of people mad. Okay. I'll show you guys one technical indicator and then we'll move on to talking about Bitcoin and crypto. I'm going to show you one thing. We delete everything on this chart. Okay. And I just want you to look at two levels. 1, 2, 3, and 4. Okay. Now I want you to look at the bottom of the screen. I want you to look at these red and yellow, this red and yellow bar here. Sorry, red and green. You see it? You see that?
Mm-hmm.
It matches with 2 and 4. See that? It aligns with 2 and 4. You see that?
Yeah.
So what happened? Price made a lower low. Momentum or volume did not. Price made a lower low marked by 4. But momentum did not make a lower low. See this?
Mm-hmm.
You have a lower low on point number 2. But 2 is not lower than 4. Okay? What does that mean? That means the big money, the smart money, has stopped selling here. They've turned to buyers. So someone's buying here. It doesn't mean they're going to make money or they're going to be right, but big money's buying here. Okay? If you want to read more about that, that's called volume convergence or divergence, but we're not going to get into it any more than that. Okay. Volume, convergence, and divergence tells me that bigger money is buying than selling where we are now in bonds. Okay. Any thoughts, questions, or ideas around that? Okay, good stuff. Let's look at, we're gonna look at Bitcoin. Okay, because when you start following Bitcoin, you're gonna see that Bitcoin is gonna be a market that you are gonna wanna follow. And you're gonna see the news outlets like Bloomberg and Reuters, they're gonna be following it. Okay. And you know, Bitcoin is one of those assets that, like, with all the shit that's happening, all these narratives, like all these events that are happening around the world, like it's all just pointing at like thumbs up for Bitcoin and cryptocurrencies.
Yeah, when we see less trust in the government and the institutions, might see more buying in Bitcoin.
Exactly. Exactly. Let's
That
zoom
used to
into
be
Bitcoin.
gold. That used to be gold, and now Bitcoin is starting to become a little bit more accepted as a secure asset that's sort of not controlled.
Okay, it is not exactly, right? So it's like, it's fully decentralized, like actually. Like there's no central control.
I wouldn't say it's private, Sergio. We're going to get into that. I'm going to talk a bit more about that. I'd say it's anonymous. If I know your...
It's not government.
Sorry? Oh, you mean private, not... Okay. Okay.
Yeah, that's what I mean by private, non-government.
Yeah. Sorry.
So it's decentralized, permissionless, non-government, global. It's a monetary system. That's what Bitcoin is. Okay. So Bitcoin's super important to follow. You can see that Bitcoin started topping out when the yields on the 10-year really started going up. Okay. So what that's saying is, as yields go higher, people don't want Bitcoin still. So Bitcoin's still correlated to risk on and risk off. Okay. So if Bitcoin is going up, typically bond markets are going to go up, stock markets are going to go up, everything else is going to go up with it. If Bitcoin's going down, typically everything's going to go down except for maybe commodities and gold and maybe, like, you know, commodities essentially. Okay. So just like the stock market, I look at Bitcoin, I say, okay, like what could happen? Are we going to continue heading higher? Maybe. Are we going to head lower? Maybe. Are we going to go sideways? Maybe. Okay. I don't know. But what I do know is whatever happens in the 10-year is going to impact this. And if there's more wars, if there's more distrust in government, if there's more money printing, if there's more like that, like geopolitical, like polarization, like that type of stuff, that's just building stronger stories for Bitcoin. And you're going to see Bitcoin become more and more popular. Okay.
And here in Canada, we have a decent dollar. US is a pretty strong dollar, even though it's losing its status. But there's a lot of countries that previously had a really weak dollar, or they just used US dollars, and that gives them more of an incentive to use Bitcoin instead.
Yeah, exactly. Like if you look at a chart of the US dollar against the ruble, right? Like this right here is, this move up is the ruble depreciating 50% against the US dollar.
Practically overnight.
Practically overnight. Why did that happen? They squeezed Russia out of the US financial system, and there was a panic. Okay. So if you cut someone out of an economic system, that damages their economy and that damages the currency, right? Luckily, Russia's able, you know, Russia's got pull. Russia can do things to enhance their economic system, essentially, and you saw the ruble come back down to like, you know, reality. Okay. But it doesn't mean that this can't happen again and again until the ruble doesn't exist anymore. And if you look at the USD against many currencies, like let's call it, see if we can get a peso here. The USD Colombian peso, right? Like the US has this grip. They're like a kraken, like an octopus. And because of their monetary imperialism, you see that the US dollar will appreciate over the long term against all these other currencies. All of them. So people are putting their money into US dollars and Bitcoin. And they're selling foreign currency. And that's just what's happening right now. And that's what's been happening. Except they weren't buying gold, Bitcoin before, they were buying gold and silver and real estate. Right? So, you know, kind of good to understand what's happening with the US dollar. We didn't look at the US dollar, but you must know that when stock markets are doing poorly or Bitcoin's doing poorly, most likely the US dollar is doing very well. Because the US has that grip on the whole system. Okay. If US dollar goes up, this is the US dollar against the basket of currencies, US dollar goes up, that's bad for a lot of people.
Yeah. And I'll just say that doesn't have to be permanent. I mean, US has had this grip with their currency for a long time, and that could change. It looks like the tide could be turning against them.
Yeah.
That'd be a really weird thing to see. Maybe we'll see another currency start to take hold, because the only currencies that really hang with US dollar, and I haven't dove into it too much, would probably be the euro, Canadian dollar, and the British pound. Whereas all the other currencies are really, as you zoom out on the chart, they're not looking too strong.
Exactly.
Yeah.
Exactly. US is near the end of its grip. But before it ends, like it can do some damage. Like if you look at the US, I'm zoomed out here, like it could easily go like this, do tons of damage across the world, and then come down like that. Right? Like it's not out of the question. You know what I mean? So what we don't want to see is the US dollar above this purple line, and then it just continues to head higher. That would mean that the US hegemony is like clearly here to stay. If we don't take out the previous high of 2002, 2003, and we just go like this, then yeah, hegemony is being diminished, and it's clear. Okay. Any ideas or thoughts there, guys, gals?
Randy's got a question about the Amero dollar. I've heard about this. I don't know a lot about it. I don't know if it's in the works or just an idea. But Sergio, are you familiar with this?
The Amero? Yeah, I heard it. I've heard that in like some guy was doing a documentary on YouTube and was talking about like a new world order, and like eventually like Europe and United States, they combine their currencies, and now you have the Amero.
Got it. Okay.
Very possible, because when I look at a chart of the US dollar against the euro dollar, okay, when I zoom out, what I see is a currency that can potentially go back down to like parity, back down to these levels. Right? And if we see the euro doing something like that against the US dollar, there could be a reform of the European Union and their currency, which could lead to a currency where the US and the euro come together. But that's all speculation, right? Like it's, you know, like when I watched that documentary, that guy wasn't talking about Bitcoin. There's no Bitcoin in that documentary. So maybe Bitcoin is that new world order currency, right? Who knows?
I don't know.
But something to watch out for.
I
Sorry?
can't see governments, especially Western and European governments, adopting Bitcoin. I don't know. Like the fiat currency system has been in place for a while, and I think governments like that.
Yeah, but
Like,
the governments benefit because people don't understand it. As more people start to understand that system, you're gonna have more people opt out of that system as much as they can.
yeah, I can see
Right.
that.
So, like, you're either under the you live your life thinking, okay, a government has to issue the currency, and that's the only way it could be, or you can adopt the idea that a free market may actually be able to choose the currency for a country or for the globe or for a group of countries.
Yeah, and that raises flags where it might not seem legitimate compared to what we're used to. Might seem sort of dangerous, but I don't know. I mean, we could always have two worlds where people use Bitcoin, it's not outlawed, and you can also use a traditional, well, not traditional, but like
Internet is
currency as well.
borderless, okay? Countries and governments, they want internet borders, right?
Mhm.
Bitcoin is money for a borderless digital world. Period. Right? So as more people start seeing this, hey, I think having a global money system for a digital world makes sense. More people will adopt Bitcoin. And what you'll see happen is more people adopting Bitcoin and the US dollar and selling things like the euro, the British pound, the Japanese yen, the South Korean won. All these currencies will start getting sold.
Yeah, but there'd have to be a big partnership. Like there'd have to be maybe one centralized body, like a one world government that controls that currency, or they all have a say in what happens. That'd be really, really different, radically different.
Yeah, like the world is already under the like an imperial monetary system, right? So whether people know that or not, that's what it is. Bitcoin is trying to dismantle that essentially. And yeah, governments don't want that. But if people start asking for it, like it's just gonna happen. Anyways, Amero, who knows?
Yeah, I might do some research on that. Randy, if you know more than we do, and there's something that we haven't really said about it, come off mute and tell us a bit more.
Yeah, guys, the only thing that I got from it, quite a while ago, was that it was just the three countries joining up, just like you guys had said. And that's pretty much it. It sounded like it was going to come together, and I haven't heard nothing about it for years now. So I don't know if it's a possibility. I was just kind of curious if you guys had any insight into it.
It is possible. You want to see what happens. You want to see what the euro starts doing against the US dollar. If the euro starts free falling, something like that could happen. Okay.
Serge, let's pivot. Oh, sorry, Randy, go ahead.
I was just going to say with the cryptocurrency, I don't just have this feeling that if it's not in the it's mainstream, but it's not mainstream. I think it's just the government waiting to actually come up with a way for them to manipulate it, use it, and just like they are with the fiat currency. I think that's kind of what's gotten in the way more than anything. That's my opinion.
Yeah, like listen, people are going to want to get involved and figure out how to control it, maximize profits from it, For now, what it looks like is big institutions are more like facilitating transactions and trying to build products on top of it. You know what I mean? But soon we will have those market participants intersect and get in there. But I think that's only good for Bitcoin. At the end of the day, you can't change the monetary network of Bitcoin. You can't.
That's right. And
no one can.
Yeah, and we're seeing a shift in like the culture and the way people talk about Bitcoin, more people are buying. Like most people I know have Bitcoin, have bought it, have a bit of experience. But even just over Easter at the dinner table, seeing extended family, topic came up, and I just started to take tabs, like what percentage of people here own Bitcoin? And it was pretty low. And I think in the general public, it's really low, but they all know about it and they have their idea about it. And when you hear about these scams and ways that it's used in crime, that turns a lot of people off.
Why?
Even like the same thing with cash. What's that?
Why?
I don't know why. I don't know. I mean, people like to feel safe, so it's really interesting. But I'll talk about one thing that happened to Sarah. Most of you guys know Sarah. Serge, is it cool if I share my screen?
Yeah, please.
Got it. So we're going to talk a little bit more soon, me and Serge, about these centralized crypto exchanges. This one here, Coinberry. Go to their website, give you an idea. Based out of Canada, FinTrack registered. They're really playing the rules with what a crypto platform would be, and they're currently being offered by WonderFi to get bought out. Kevin O'Leary is backing WonderFi. And I think we're going to see it where people with a big name, when they say something, people kind of gravitate towards that. So Kevin O'Leary used to be sort of anti-Bitcoin. He's becoming a little bit more, you should buy into this and diversify as if it was a stock or industry in equities. That kind of seems to be how he's treating it. But Sarah had an account with Coinberry, and she noticed a suspicious transaction, and some of her Bitcoin was sent to a wallet address. And for all you guys that know, wallet addresses usually look like this. It's a really long number, bunch of numbers and letters, capital, lowercase. And so what you're able to do, because everything is public, it's not private. People say Bitcoin's private, it's anonymous. So by typing in this address into one of these websites like blockchain.com, we can look it up on the blockchain. So we can see this is the amount that was sent from her account. We're trying to figure out how that happened. She called the customer service line for Coinberry. It might have just been a fake number that was published online. So it would have been her fault giving out that information. But this makes a lot of people uneasy. And we're able to see that the money was sent to this address, and then soon after sent to another address. And right away, by looking here at this address, look at how many Bitcoin were in this address. Total received over time. That's 54,000. I don't know anyone that's, more than a couple Bitcoin, never mind 54,000. So this is really strange. We don't know who this person is, but we can see where the Bitcoins went and how they were dispersed. So if Sergio wanted me to send him some Bitcoin, I sent him some Bitcoin. I can always look up his address and see how much is in there. Things are not private like they are with the bank. It's not like you can just have one bank account, you give them your SIN number. That makes a lot of people uneasy. I'm not too sure why. I guess we live in this world where people want documented ownership for certain things. Whereas back in the day with gold, you just go ahead and own gold. No one knows how much you have. And you can go ahead and have a transaction. And that would have been private. That wouldn't have this public documentation. Sergio, where did Sergio go? Oh, God, all right, Serge. We're going to talk a little bit about Elon. And I see Dayton is hopping off for a call. I'm going to pull something up here. All right, I think we'll switch topics and we'll talk about what's going on with Elon Musk. There's a whole lot of news with Elon trying to acquire Twitter. people are happy about it. Some people are upset about it. He has an idea of how it should be run. It started off, he bought a massive amount of stocks, almost 10% of the shares of Twitter, had some conversations with the board. He ended up rejecting getting onto the board. And we're thinking, how come? And that's because there's a cap on how much you can own when you're sitting on the board. So that's probably why he did not want to join. And now people are calling it the hostile takeover of Twitter. And I find it kind of funny. I don't have an account myself, but I see that it is a major sort of public square for how we communicate today. When people have an idea, something to say, government, business people, Elon Musk himself will go ahead and go to Twitter for it. And he seems to have a problem with the free speech aspect of things. So I think we'll pull up a chart here of the company and how they've been doing. They had a CEO take over in November of 2021. Let me pull up a chart real quick. All right, here we go. So this is December 2021. We go out 6 months. We can see Parag, the new CEO, took over November 29th, 2021. And we can see right after that, there was a big dip. So November, just through that last part of 2021, when a lot of tech stocks were doing really well. Twitter, not so much. It wasn't received well by the public. This is a company that has done really well since they were sort of founded, but they've had some turmoil up and down. But just recently, when the news came out with Elon, it was well received. That would change the decision by the board of directors hugely. So they went through this sort of down period. They had a new CEO. He's kind of changing stuff. And what we see with this online world is there's sort of, when you get into how we view it, when you think about an online platform where you can look at videos, YouTube's sort of the first company that comes to mind. And when you look at the numbers, I don't know if I'll pull it up right now, but I've seen before, that's where majority is. The vast majority of video sharing is on the platform YouTube as opposed to other platforms. Twitter has its own way of working, and it's sort of the number one company. And it is free. That's another thing. So YouTube, I think they have a paid version. Twitter, a lot of these Google services, they are provided for free. Our data is being collected. Our data is being used, and that's where the business is. There are paid services that are coming out that will not be using that. When we look at, pull up, Donald Trump came out with news that he was starting a social media platform, and we'll go out maybe 1 year. It's been less than a year. Yep, it's been less than a year since it's been out. He started with this SPAC, and this was going to acquire his company. And the idea of this company was free speech, and it was backed by this mogul of Donald Trump, which some people will love to buy into his platform and use it. Some people will not. And it was going to be a paid service. So right there, you're going to cut off a lot of users, but it could really catch on. So once the news hit and it was released, had a huge spike, it's been up and down like crazy, but this is not doing well now that the news is out for Elon Musk taking over Twitter. Twitter's already established company. People already have accounts on there. It is free to use from the actual user. Sergio, we're talking about Twitter and
Very good.
how
I had a chart
Parag
open earlier.
You want to open one on TradingView? It might look nicer.
Yeah.
Hey, go ahead.
Sorry, guys. I had to go to the washroom very badly.
Sorry, sir. Dayton took a call. So he's off right now.
I didn't eat my vegetables. So yeah, so here's the chart, man. Do you see?
No, you gotta share your screen, bro.
Oh yeah. This is Twitter here.
Yeah. So if you zoom into the last, we'll focus in on
Just
end of
Elon Musk
2021,
buying the
beginning of
dip, that's all.
2022. Yeah, that's a dip. There seemed to be a trend downwards after the new CEO came in, and then big spike from Elon, but it's not near its all-time highs.
No.
So this isn't mimicking the S&P 500 at all that we looked at earlier.
It's not mimicking it, but I think you got to look at, remember the S&P, its movement is dictated by a few companies.
Yep.
Okay. It's a basket weighted stock. Like it's a market cap weighted index. So the companies like Apple and Amazon and like those companies, you'll see the chart of those companies will closely resemble the S&P 500. But the
Yeah.
smaller stocks like Twitter, Palantir, I don't know, Peloton, UAVS, a bunch of companies.
And I know Apple, I think Apple's in the S&P 500. Is Twitter in the S&P 500? I'm not sure.
Yeah.
Yeah. But I noticed that with a lot of tech stocks
Like,
that are
doesn't
paid
this look like the
services-
S&P? Sorry, just real quick. Doesn't this look more like the S&P?
that does. And Apple is something you pay for, whereas Twitter you don't. So I think that's why their stock wouldn't be mimicking the same way. Whereas a Netflix or a DocuSign, that looked more like the S&P. That had that tech boom of people
No, it
coming
didn't.
in.
Look
That
at
was
DocuSign. That does not look like the S&P.
the ramp up is more violent, yeah, and then the crash. I guess you're right. But the periods of highs and lows were sort of similar. Whereas Twitter's up and down, and it doesn't, you don't really know unless you look at the news. There's a lot of news that causes that. And then Palantir, yeah.
Look at the Palantir topped out January 2021.
2021.
So you've had stocks top out like a year ago, more than a year ago. But the S&P only topped out January 2022. Okay, back to Twitter. Did you make the points that we wanted to make around Twitter and stuff?
I made a couple points to talk about Elon Musk, and let me just see whatever topics we have because we got 5 minutes. We'll probably
I
stay
don't
on
think
this.
Elon Musk buys the top.
What's that?
Elon Musk isn't interested at buying things when they're at the top.
Yeah, okay. I know I'm hearing news and maybe we should do a little bit more research, but
Look,
it sounds like he's offering a premium and that was turned down. But
my
I
bad.
could, yeah,
It was turned down because he's trying to control the company. They didn't want to give up control. The point is, we're back to levels not seen since 2014 and 2015, 2014. Right? So the fact that Elon's buying here is saying something.
okay.
It's saying something. And like, people like Twitter, right? Like the people that use Twitter, like love Twitter. You know what I mean?
Okay. Are you a
And
Twitter
the
user?
Yeah.
Okay. I don't have an account, so I'm not in the game here, and I don't own any stock not in a fund. So I'll
A
say
lot
that.
of people that are on Twitter are
Yeah.
finance professionals, IT professionals, legal professionals, salespeople, like a lot. right? But I think what was most interesting about Elon Musk and Twitter is like, he's like, hey, I'm buying this. I want to buy this company because like there's a threat to free speech right now.
Yeah, and that has a lot of people excited. Some people, for some reason, some people don't like that. And he said that he wanted the company to go private, so not publicly traded. I find that to be very interesting as well.
It's
That's not something that we usually see. But yeah, Donald Trump's platform was pro free speech. I think there's a fear that it's going to be adopted only by people that are Donald Trump supporters, whereas Elon Musk wants to take over a company that's already established with a lot of people using it. So this could be really bad news for Donald Trump's company. We've seen Parler take over before. Parler was a free speech platform. I think it was very similar to Twitter. I didn't use that one either. But they got shut down. They got denied access to servers. That was really strange scenario. And now it seems like there's a whole lot of very small social media companies starting up. And they all have the same idea. No censorship, free speech. And Elon sees the opportunity to use a company that already has lots of users. People probably aren't going to leave, and has an infrastructure to be free for the user, and it has ways to make money around that. So he says, you know what? I take over the market.
Yeah, exactly. It's a good move. Like I think starting a social media company from scratch is hard. So I think what he's doing is smart. And I think the timing of his buy was good. Something to pay attention to, see how that unfolds. Okay, dude, we talked about some scams in crypto, ways to hold crypto. We talked about bonds, the US dollar, the S&P 500, having conversations with your clients around that. I think it was good. Anything you think we missed just before we wrap up here?
I'll say, I don't know, I showed a little bit about how you can look up transactions and wallets on the blockchain. That's very unique to Bitcoin that we have access to that.
Yeah.
Yeah, like if I send you some Bitcoin, I can see how much you have in your wallet. That's really strange. And whenever there's something new, people don't want to adopt it right away. You probably remember Facebook. Are your parents on Facebook, Sergio?
Yeah, it took a while though.
It took a while. Like it came out, they're like, why would I want all my information out there? That's weird. Like I post a picture, everyone sees it. And now they're probably on Facebook more than you are.
Yeah. Well, probably not more than me, but yeah, I get what you're saying.
So the same thing I think is going to happen. Whereas people always say, you know what, it's a fad, it's a phase, we don't need this. It might just become the new way of doing things. And it might be another way of doing things that's not the way of doing things. I think Bitcoin was made to be a disruptor. It might not be a direct replacement. But we do see, like you said earlier, the government wants to control the internet. Lots of governments around the world have what's called an internet kill switch. They're able to shut down the internet in their country. We might see like what China did, banning Bitcoin. I don't know how that's going to be enforced, but I think that's easier than enforcing the gold ban, which we saw in the US a couple decades ago.
Wait, you think it's easier to censor Bitcoin than gold?
Just because it's on the internet. And ways to control the internet. But
the thing is that protocol will continue to run. Unless like everybody gets shut down. You know what I mean? Like there's a worldwide cyber outage. Yeah,
that's something that would be
and that doesn't just affect Bitcoin, dude. That affects
everything.
So Bitcoin will just continue doing what Bitcoin does. Governments will have huge problems to fix, and then once the lights get turned back on, Bitcoin will just be there.
Yeah, I don't know if it'll be easier or harder actually, because gold you'd have to physically get it into the country. Like you said, Bitcoin's borderless. I don't know tech that well, but I know if you had gold, no one knows you have it. The gold ban in the States wouldn't have done much, but maybe acquiring more would have been harder. Whereas with Bitcoin, there's a bunch of ways to do it. Right?
Yeah.
And Demetrios said DARPA tech can block specific things on the internet without disrupting service. Yeah, see, that's something that I don't know a whole lot about. I've heard of DARPA, and internet is open. Internet's sort of this democratized thing.
Pretty sure DARPA made Bitcoin.
What's that? What's
Like
that?
MIT is a huge hub for all this, right? MIT.
Okay. Yeah.
So yeah, probably. You know, like there's no reason to block. Like once you do that, now it's like you're stamping, you're saying, yeah, we're communist, right? And if America does that, that's why China did it and America didn't. You understand?
Yeah. They don't care.
Like we're going into these risk scenarios where it's like the collateral damage would be so bad that like it's like it could happen, but not something I'd bet on.
Okay.
You
I
know?
get that. As long as it's not well received by the public, it probably won't happen. But if majority of people say, hey, we don't want Bitcoin, this is scary, because people relate to it. Like I hear it on the news, there's scams. People call me on the phone saying, give me Bitcoin and try to blackmail me. If that's the only interaction that you have with it and it goes away, you don't care. Kind of like with gun bans. People that don't own guns don't care. And if
Sure.
most people don't own them, then it's fine. You can run on it as a political platform. That might become the Bitcoin, but I don't think it's an enemy. I don't think it's been put out there with propaganda to say that it's bad. And by having open conversations, people could say, hey, you know what, maybe this is something that I want, or I want people to be able to have, things like that. So I see some interesting stuff coming from Demetrios. We are past 12 o'clock, so probably going to cut it, but I want to hear some of the stuff out of Demetrios, maybe next week or something. Maybe we'll stay on for a few minutes, but I think we're good to cut the feed. What do you say, Serge?
Yeah.
This was good. So next week we're going to be talking next week. We're going to be talking